What's up, YouTube? It's your boy Khaled, aka Bearish Bully. I know I look different, it is crazy, but sometimes change is good. And we're actually going to talk about why change is good when it comes to moving averages. We're going to look at the different charts and we're going to make a comparison and show you what happens when you just simply look at another chart. It'll give you a whole different perspective on, well, if you're using candlesticks, on where the possibilities are, whether it's going to go down more, whether it's going to go up more, if there is a level of resistance coming, if there's a level of support coming. So let's dive in. All right, so first let's take a look at the 1 hour chart or 20-day chart. Now on this one we're going to be using YVR, and yes, of course, you can see I only made $18 on this trade. But that's actually because I had my stop loss in place. And I know normally I just use mental stop losses, but during the day, if I'm at the office, I can't really pay too much attention to it. So if I am in on a trade, then I will just let my stop losses take over. And this way it did protect me. So I did have it set up to where I'd at least clear the cost of me buying in and selling, which is going to be $7 per trade, so that's 14 bucks. So here I made back my $14 plus $4 on top, right? So this way I only ended up walking away with $4, but it's better than me walking away with nothing. So I'm pretty okay with that. Now on this chart, you'll see that it did have a support at the 20-day EMA on the 50-day, on the 1 hour chart or the 20-day chart, which you can actually set up to the way that you like, but I have it set up to 20 days, 1 hour. Now, you'll see here that there is a pretty solid area. So if you drew a line in here at the $5 level, you'd see that yes, it can act like a level of support, or it can be a level of resistance, but in this chart it is a level of support. Now let's see what will happen if we look at a different chart. Let's say the 30-minute chart or the 10-day chart, which is just the way that I have it set up. On this chart you can see that it broke below the 20-day moving average, but it was actually getting rejected from the 20-day moving average. So on one chart you have it showing as support, and on one chart you have it showing as resistance. So naturally, based on this chart, you'd say, okay, you know what, it's either gonna hold around the $5 level or it could drop down to $4.49, which is where the 50-day moving average sits. So now let's take a look at another chart. This is the 5-day, 5-minute chart. Now on this chart, you'll see that it broke through both the 50-day, the 20-day, and now it's, oh, sorry, I got a message. And now it's kind of, it actually did bounce off of the 200-day moving average, but then it came back and it retested, but it broke through the 200-day moving average. So let's see what happens if we go down to a minute chart. Now the minute chart is showing that it's completely oversold. That's when the 20-day is below the 50-day, which is below the 200-day. And if you watched one of my previous videos on moving averages, I'll put the link to the end of this video. You'll see that this is one of my favorite patterns to trade, when the 20-day is below the 50, which is below the 200. The best time to actually trade this scenario is when you see it sitting above a level of support, a previous level of support, which in this case would be $5. But it doesn't necessarily mean that it will bounce. It's just a safer option to trade. Now for me, obviously, when it comes down to a later in the day trade, I typically don't want to trade something that's been selling off this much, but if it is holding ground, then it may be a pretty good entry for you. All right, let's take a look at a different chart. All right, so now we're looking at Tesla. Of course, this is every millennial trader's dream stock for trading. I mean, it's made so many people so much money in 2020 that this has just become like a gold mine stock. Of course, aside from GME, which is just making millionaires and billionaires, but either way, that's another story. So here we go, Tesla 5-day, 5-minute chart. Now you can see here twice in this chart, we got this pattern. You've got the 20-day, below the 50-day, below the 200-day. And that is my favorite pattern to trade, but it doesn't necessarily mean that it won't continue to drop, because if you look at the day before, it had the same thing, 20-day, 50-day, 200. It did come down, but it didn't actually just take off. It actually got rejected again by the 50. It did come back and retest the 200, but then it got killed. I mean, it just ran all the way down. But I do have my support and resistance level in place. So I would know that if it is coming down and then it tests this level of support, and I have my favorite pattern set up, then yeah, this is going to be an awesome opportunity to get in, because it is going to bounce off of here and it might get rejected on the 20, but hey, if it continues to go, let your plays run, right? Like if you're making money, just let it keep making you money until it shows a reversal. So this way you'd see it does get rejected off of the 50. Let me just zoom in for you guys. So it breaks through the 20-day, which is great. It actually came back, it kind of hesitated, and then afterwards it just broke right through. Then it held it as support, so now you know this is good. It did come up and get rejected off of the 50-day EMA, but it retested support on the 20, so you know you don't have to sell it yet. It kind of broke through, but it didn't actually drop. It closed above it, so that's awesome. Broke through the 50, rejected off of 200. Now when this happens and then it doesn't hold the 50 as support, that means it's gonna come back down. And it did. It didn't hold the 50-day as support, and once it breaks through here, this is when you know it's a good time to exit. You know what, I gotta put this phone on mute. This is when you know it's a good time to exit and take your profits. It comes back here. It also does not hold on the 20-day. So on the next day, let's just say, so you see actually it came back down once again, rejected on the 20, came back, rejected on the 20, came back here. Now once it comes here, look at it's bottlenecking, and once it's making this really tight area, it's still holding support right here at about 629, and then it just skyrockets right towards the end of the night. I think there was a news catalyst that came out which gave it a nice boost, but either way, next morning it failed, and it failed heavy. It broke through one level of support that I had set up. So the yellows and the reds, they were actually a trading range that I initially set up in a previous video. I mentioned that for Tesla support, key support and resistance levels. But either way, it broke through the resistance and it came back to test the bottom of my trading range. Once that happened, my setup was here for the 20-day, below the 50, below the 200. Perfect entry. Took that, ran up, did have some resistance pre-market on the support now turned resistance, but market open, it broke through, and this was great. Then it broke through the 20-day, it broke through the 50, got rejected on the 200, but it came back down and it started holding, but then it broke through and it came all the way back down to the level of resistance, now turned support, which is a great sign. So you keep holding, and it does break through your moving averages again. It doesn't quite yet come to the top of the trading range, but one key reason to why you shouldn't sell here is because it's making higher lows. All right, so you've got a low down here, comes back here, tests the support, resistance turn support, and then it comes up here. So it's just constantly making higher and higher lows. All right, and this is a great sign. But once it comes up here and it hits the top of the trading range, I would get out. take profits. There's no point of holding it because you're just taking a chance here, right? So once it did, the next morning, I didn't want to hold it overnight because you just never know what happens pre-market, especially when it's 4 a.m. and I can't trade, so I'm not going to be able to get in or get out or do anything. So I cut my position right here at the end of the night because you do see a very small level of resistance here from the past, right? You've got support here, you've got resistance here, you've got more resistance here, more resistance, more resistance, more resistance. I just couldn't take a chance. Pre-market, it did pop up, but it dropped, and I can't get in until 8 o'clock. So it just didn't make sense for me to hold, and I'm glad my position ended well. But this is something that is so important to watch when it comes to moving averages. All right, so this is the 5-day, 5-minute chart. All right, let's look at the 20-day. All right, so on the 20-day, you'll see something very similar again. Now, over here, it's showing you guys that it is completely oversold. All right, so first, it does come down right to the bottom of the trading range, which we just saw in the previous segment with the 5-minute chart. But now on the 20-day, it does show that it broke through the 20-day moving averages and it got rejected by the 50-day. So obviously it depends on your trading style. If you're looking to just do day trades, then yeah, you are going to want to focus more so on 1-minute chart, 5-minute chart. The reason why I look at every chart, even though I'm day trading, I might only trade for an hour or 30 minutes. But since the market has changed dramatically since last year, the stocks are not as volatile, the swings are not as big, there's not a lot of continuation. So I like to look at every chart so I can map out where future support levels or future resistance levels are going to be. One again would be EEIQ. Now with EEIQ, it's such a new chart. You're not going to know where all these levels are going to be. But when I was looking at the charts, obviously you see that it is oversold at some point, but you can still use these lines. All right, it's not going to be as big of a difference, but here, you see it came down, it did retest the $15 level. And another thing you want to keep in mind is psychological numbers. Anything that's a multiple of 10 or 5 is going to be a huge psychological number. It's just the way that it is. Solid numbers are all the same, right? So 50 cents, 75 cents, $1, $5, $10. These are all numbers that are just key psychological levels to watch out for, which is why I never set my sells at solid numbers. If I buy something at $25 and I want to sell it at 27, I'm not going to put my sell order at 27. I'm going to put my sell order, well, normally I'll put my sell order at 30, and then once it comes to close to 27, I'll drop it down real fast and I'll sell it at like 26.80, 26.85. This way I know for sure I'm going to fill my order, and that's it. I don't need to look back at the chart and be like, oh man, I could have held, I should have held. You don't want to do that. So I use moving averages. Once I see the pattern is in play, which, like I've said before, this is my favorite pattern right here. 20 below the 50, below the 200. That means it is going to come up once it holds firm on a level of support that you have mapped out. So make sure you guys map out your support levels from previous areas. If it's trading in uncharted territories, like if, for example, this one, it goes ballistic and it goes all the way up to 35 during market hours, but pre-market it was actually trading up to I think 70 or 72. Yeah, $70. You're not gonna know, but you can still look at here and you'll see areas where it's bouncing. Here it touched twice, so 55 would be a big level. Another area which is 40 would be a big level, and 35, which it hit during market hours. So now all these are areas of resistance or possible support if it goes high enough. So this is something to watch out for on Monday. And yeah, I did keep a very small position of 10 shares because I'd rather just have a little bit of my foot in the door, especially with this one being a new stock. The level of volume was so low, and it is a low float stock. So this thing can rip or dip really big, really fast. And you don't want to be holding a really heavy position in there where your losses are going to be substantial and you're going to be crying for the rest of the week. But of course, if it works in your favor, that's great. However, that's just a big risk that I'm not willing to take. All right, so keep that in mind whenever you guys are looking at a stock and you're unsure of where it can go, if it is going to be trading in an area where it hasn't traded before. Use your moving averages. They are always moving, so look at different charts and it will give you a different perspective every time. If you're looking to trade for just a few minutes, hour, day, week, that's what they're there for. All right, so use it to your advantage. It's worked for me. It's saved me several times. It's helped me several times, and hopefully it could do the same for you guys. All right, if you found anything useful in this video, please give me a big thumbs up. If you haven't subscribed, do that already. Join the team. You know, we're a bunch of bears and bulls in here, and we can add a bunch more. We finally hit over 100, which, you know what, it might not be that much, but for me, that's huge. I'm so happy with that. I'm so grateful for that, and I really do appreciate the support. If you guys have any questions, please let me know in the comment section down below. If there's a video that you guys want me to make, I'll go ahead and make one for it. Stay green, and I'll see you guys in the next one.